Global energy supplies are breaking. The Strait of Hormuz, the world's most vital oil route, is no longer a reliable waterway for tankers, facing unprecedented levels of instability and risk. The global oil market is facing its biggest supply disruption ever, according to recent reports. Since the February 28 conflict started, global trade mechanics have broken down, causing significant disruptions across international supply chains. Global markets depended on predictable crude flows through the strait, but that stability broke this month, triggering widespread uncertainty across energy sectors. A critical maritime corridor carrying 20% of global oil now barely moves any volume, effectively halting essential energy flows. This regional conflict is a systemic energy security collapse. It threatens to starve industrial economies of the specific fuels required for their continued survival, potentially destabilizing global markets. Recent data shows the catastrophe has reached much higher numbers than previously recorded. The International Energy Agency reports that global oil supply dropped 10.1 million barrels per day this March. This brought total daily supply down to 97 million barrels. OPEC production collapsed by 9.4 million barrels per day month over month, leaving totals at just 42.4 million barrels per day and driving this massive deficit. Non-OPEC supply also fell, dropping 770,000 barrels per day to 54.7 million, marking a significant decline in global production levels. As shipping to Hormuz has ground to a halt, Gulf producers have been forced to collectively shut roughly 10 million barrels a day of output. According to the EI, Iraq, Saudi Arabia, Kuwait, the UAE, Qatar, and Bahrain cut crude oil production by 7.5 million barrels per day this March. This figure will change. Forecasts show these production shut-ins hitting 91 million barrels per day in April, redirecting oil through other ports, works, and tankers, but the Hormuz shutdown is too massive for those workarounds to handle. The EIA calls this combined impact the biggest threat to global energy security ever recorded. The crisis extends far beyond crude oil into the realm of natural gas. Energy flow disruptions in the Strait cut global liquefied natural gas (LNG) supply by about 20%, creating significant volatility in international markets. This causes huge price spikes for countries relying on gas to run their power plants. Bangladesh and Pakistan rely heavily on gas for 50% and 25% of their electricity, respectively. This growing shortage hits industrial output and power stability hard, creating a real, escalating crisis for local energy security. To fix this, 32 EIA member countries coordinated the biggest emergency oil release ever recorded. They released 400 million barrels to steady the market and mitigate the sudden supply shock. Even with this huge injection, global oil inventories dropped 85 million barrels in March. Outside the Middle East Gulf, the drain hit harder. Global stocks dropped 25 million barrels, averaging a significant decline of 16.6 million barrels per day. The market is also experiencing extreme volatility, with oil prices having gyrated wildly since the start of the war. While a record release of 400 million barrels of emergency reserves was coordinated, the loss of 20% of global eng supply is driving volatility across Asian and European markets. The disruption to energy trade flows through the Strait of Hormuz has created the largest supply disruption in the history of the global oil market. This instability has forced several Gulf producers to collectively shut in millions of barrels of daily output. This strategic move effectively bypasses the significant maritime risks inherent to the Strait of Hormuz. The world is now watching a critical diplomatic window. Ongoing restrictions to tanker movements through the Strait of Hormuz have led to the largest supply disruption in history. This instability threatens global energy security and affordability. If this disruption lasts months, the global oil market must undergo a difficult, costly rebalancing process. A persistent disruption could lead to a global oil market rebalancing through lower demand and price, sensitive markets, and smaller European storage replenishment. Prices aren't just spiking temporarily, the global energy map is actually reordering itself. We are moving away from the era of cheap, steady Middle East energy flows toward a new, uncertain period defined by extreme volatility and fragmented strategic interests across the globe. The loss of almost 20% of global eng supply is fueling volatility and forcing demand adjustments across key Asian and European import markets. In these price-sensitive regions, inadequate supplies could lead to production curtailments in gas-intensive industries. 2024. If the Strait of Hormuz stops functioning as a reliable corridor, global energy trade will fundamentally change. We need to prepare for a reality where energy security depends less on market prices and more on who physically controls specific maritime choke points, creating a landscape of heightened geopolitical risk. Global power is shifting right now. To track these changes as they happen, subscribe and turn on notifications. I'll be watching the 5-day diplomatic window closely to see how it unfolds. Do you think this crisis will end in a treaty or further conflict? Let me know your thoughts. Leave your analysis in the comments below.